Good afternoon, everyone. Thank you for attending today's webinar, Small Business Taxes 101 with Kimberly Theisen. My name is Madeline Wolski. I'm the business librarian at Champaign Public Library and excited to provide this amazing learning opportunity for you today. So a couple of things before we get started. So if you have any questions, we're here to help. We do a lot of one-on-one consultations with many of our patrons and community members, ranging from business assistants, which is more my field, to other librarians have taught how to knit. So really exciting opportunities to be found at the library. And you can always book that or learn more at our website, champaign.org/booklibrarian. During our open hours, when we aren't closed due to the inclement weather, you can always chat with us at our website and always send an email to librarian@champaign.org if you have any further questions. So today, if you have any questions during the webinar, and that could be you maybe want to chat with others who are here, ask questions from Kimberly or myself, please feel free to type that in the chat box, but just ensure that it's getting sent to the person that you want to send it to. So if you click on that to, you'll see hosts and panelists or everyone. So if you want it to be public, make sure you click everyone versus just sending it to myself or Kimberly. If you'd like to verbalize your question, feel free to move your mouse down into the middle bottom of the screen and raise your hand, and I will be able to unmute you so you can ask your question to Kimberly or myself. So without further ado, I'd love to introduce Kimberly Theisen. She's been a CPA for 15 years and her current account firm for the past 4 years. She specializes in small business and individual accounting and tax preparation, and she currently works at Stephens Stull in Bloomington. So Kimberly, I'm going to go ahead and stop sharing my screen so you can just run with it.
All right, thank you so much. Hi, I'm Kimberly Theisen. I'm going to, let's make sure that this shares correctly. All right. Like she said, thanks for the introduction. I'm excited that you guys are all here today in this snowy wonderland, learning about small business taxes. Like she said, I'm with Stephens Stull. My business partner and I both live in Bloomington, but our office is actually in Savoy. So it's much closer to you all, assuming that you're in the Champaign area. We are right behind the movie theater down in Savoy, and we like our little office down there, so come and see us. We're going to be going over a few things today. We'll start with some best practices just in your business of things that you want to do, keep in mind. Best practices, they are what they are. Some deductions that as small business owners, some might be pretty logical for you, some might not be, but just a couple tips to be thinking of. And then we'll go over some of the things that are new for 2021 that you'll want to be thinking of and keeping an eye out for, see if we can help make things easier or get you some of your tax money back if you are eligible for some credits or extra deductions. So, with no further ado, some of our best practices, the first and foremost thing that you can do when you are starting your business is to keep your business and personal expenses separate. You do not want to commingle your funds. We highly recommend getting a business bank account specific for your business and keeping your income going in there, your expenses going out there. You can definitely pay yourself from there or take distributions from there depending on your entity setup, but keeping them separate will make your life easier. It will make your accountants, your tax preparers' life easier if you're using one of those. It will make things a lot easier if you're ever to get audited by the IRS, which doesn't happen often, but does happen. And you want to be able to be prepared and have that be as painless a process as possible. And by having things separate and documented, you are able to represent yourself and present the facts a lot easier if that were to ever happen to you. I like to recommend that our businesses create a budget when you are starting a business or are going year over year. You want to be able to be sure that you are going to be bringing in enough income to cover the expenses. The only way that you're going to know that is if you sit down and create a budget and think about what it's going to look like. Deciding where you want to spend your money, whether it's going to be in software and equipment, or your money's better spent on advertising or investing in more inventory, whatever your type of business is. Creating a budget will help you keep an eye on the profit and loss and what you're going to be doing so that you have an idea that this is going to work for you. The middle best practice on here is one of the most important that I can say, is tracking all of your income and expenses, however you're going to do it, however it's going to work for you. If using a spreadsheet is going to be the easiest, please do that. If using an application such as QuickBooks or Xero or some other online application or desktop application is going to work best for you, please keep all the records, keep all of just track everything you can. Again, it will make your life easier. It'll make your accountant's life easier. And you'll be able to make sure that you're able to take all of the deductions and expenses that you are eligible for. There are a number of different online applications that are available. Like I said, there's QuickBooks, there's Xero, there's a couple of other ones. Our office is pretty heavily leaning towards QuickBooks. Myself and a few others are QuickBooks Pro advisors, so we are extremely familiar with it. I suggest finding the way that works for you, and then finding, if you're going to be working with a professional, finding a professional that is familiar with that and works along the same way. We are going into the next one. I cannot recommend enough dedicating time to keep clean and thorough records. This kind of ties back with the last one of tracking everything. But you can use QuickBooks and have everything automated as possible, but if you're not touching it and you're not cleaning it up and you're not taking at least the very minimum of time to do what needs to be done, it'll be a mess. So even if it's 15 minutes a week or a half an hour a month, sit down, organize them, keep it clean, keep it thorough, keep on top of it, be able to understand the steps that you're needing to take, and it's a lot easier for yourself and others you might be working with to have it up to date. Doing it once a month or every quarter is a whole lot easier than once a year when it's time for taxes. We have clients who do it both ways, and the folks who wait to the end are usually a little more stressed. So don't do that to yourself. Block out some time and get things organized, keep it clean, keep it thorough, make sure you know where you are, and it'll keep your stress level a lot lower, I promise. Last on here.
Question.
Yeah, sure.
We have someone asking about reconciling bank accounts. Is that something that would be within tracking or dedicating?
Yep, that would be I would consider that dedicating time to keep clean and thorough records. So a lot of the online applications such as QuickBooks will either automatically bring in your bank transactions, they can connect to your bank automatically, or you can enter transactions manually, whichever is your preference, whichever works for you. but then we recommend monthly would be best, reconciling your bank account, which means taking the bank statement from the month before and making sure that everything that is on your bank statement is in QuickBooks. And then everything that is in QuickBooks is on the bank statement. So that way you're kind of doing a double check to make sure that you are capturing everything and giving yourself a little bit of confidence that your information is correct, I guess.
Thank you so much.
Yeah. The last one listed on here is planning for major expenses. A lot of new business owners, small business owners get very into the weeds, which one is wont to do when everything's coming at you and everything is very busy. But you do want to plan for major expenses, whether that is you're very profitable and that's a big tax bill if you're not doing estimated tax payments. If that's a major piece of equipment that you are going to need to purchase, if that is some other large expense. For some people, that's payroll every 2 weeks, making sure that you are going to have enough income for that. But really, major expenses like big equipment, big remodel, big whatever, make sure you're putting that in your budget, in your forecast if you're going to do that. Maybe set some money aside every month into a separate account so that, or separate spot, separate, it doesn't have to be a separate bank account, but maybe a separate account within your tax software, spreadsheet, whatever, so that you're putting money aside and planning for the big things. We tend to see some clients that might forget that eventually their phone's going to go bad, or their laptop's going to go bad, or some piece of equipment that they use in their business is going to go bad. And then they either have to take out a loan, or sometimes it can just be bad news. So plan for those is something that we recommend. Next up is starting to discuss some of the deductions that are available. I'm going to take a small drink. Some are maybe familiar and some are possibly not. When you are starting a business, registering your business, doing all sorts of those things, you will incur what's called startup costs. And a lot of people are unaware of how to treat those for tax purposes. You usually won't start reporting expenses until your business is taking in income, but there might be expenses that have happened before that, the year before, as you're getting your business up and going. You are still eligible to deduct those startup costs in the year that you actually start the business. You can deduct up to $5,000 the first year that the business is in operation. Anything that's over $5,000, you will have to amortize, which means spread it out over 180 months. I think that's what it is. And you would spread that cost out over the upcoming years. But make sure that you still take those costs because you have spent them getting the business up and going, whether that's purchasing the website, Secretary of State fees, lawyer fees, accounting fees, all of those types of things that you've maybe incurred before the business actually gets up and going. Make sure that you're tracking those, track from day one, however you can, so that you can take advantage of those when it comes time for the first reporting on taxes. A lot of people think about vehicle expenses. We get a lot of questions about this. There are two options for taking deductions when using a vehicle for business purposes. Whether the business owns the vehicle or you own the vehicle and use it for business, you will need to spread it out between personal and business use. If if it's not completely business use, you will need to carve out your personal use of the vehicle. There are two options for vehicle expenses. You can use actual expenses, which is things like repairs and oil changes and gas and tires and things like that. The actual expenses throughout the year, you can keep track of all of those. And then whatever the portion that's business, you can take as a deduction against your business. The other option, which is a little more simple, and sometimes it's more beneficial, sometimes it's less beneficial, but is just tracking mileage and taking a deduction for mileage. You know, you get 55.5 or whatever the cents is per mile. And again, breaking it out between personal and business. I have a lot of clients that use an app that is called Mile IQ. I believe it's still free, but it is an app that you put on your cell phone that tracks every trip that you make, and then you tell the app whether that trip was business or personal. And then at the end of the year, you get a report of your mileage, and it is your personal versus your business, and it is simple. And for my clients that use that and give that to me, I love them and I highly recommend it. It seems so simple for them. The people who have implemented it really enjoy it, as opposed to keeping a log, which you do need to do if you're going to be using mileage. I have had clients that have had to report their logs to the IRS during an audit. So I do recommend that. They didn't have what they needed, and they had to pay back a lot to the IRS because all of their mileage was disallowed because they didn't have a log. So I do recommend doing that if possible. Well, I recommend doing that. It's hard stop. The next one I have listed here is a home office deduction, which has become more, sorry about my dogs, has become more prominent during COVID times and everybody working from home. Your home office needs to be exclusively used for a home office, according to the IRS. So if you have a separate bedroom that you have a desk in that you work in, but people stay there, the IRS is going to tell you no. But again, I've never seen them go back on that or try and look at it. But there are two options for when you are taking your home office deduction. There is a simplified method, which is $5 a square foot for whatever your home office is. Or the standard, which is tracking your expenses for the home and then applying the square footage from the home office to the home to those expenses. So that includes things like your real estate taxes, your homeowner's insurance, your utilities that you're using, all of those expenses for your home that would be applicable to the home office. You get to take a portion of those. It's really up to you on which one you prefer to do. I have a lot of clients choose the simplified method just because it's a lot more simple. It's a lot less record keeping. But you can look at that and see which is most beneficial for you, you and your tax preparer, and see which will get you the biggest bang for your buck and which will help you out the most. Excuse me.
Kim, we have a quick question.
Sure.
So this is related to the startup costs.
Sure.
From Pamela. Is it $5,000 only for startup costs? And is that specific to Illinois or nationwide?
So that is a federal rule. And you can take over the $5,000, the $5,000 is just what you can take in the first year. So say you, I think it's 5 years. Heather maybe can say in the chat on how many years you amortize after the initial year, but you can take $5,000 the first year, and then say you actually spent $15,000, so you have $10,000 of additional startup costs that you were not able to expense in that first year. You can amortize it over the upcoming years and spread it out over the next, let's say it's 5 years. Heather can correct me if I'm wrong. So you would take $2,000 for each year of the next 5. So you still get to take them, but you have to spread it out. I hope that answers the question.
Thank you.
Yep. One deduction that a lot of people don't think about or don't know about is the self-employed health insurance deduction. If your small business is your only business, and you don't have insurance offered through another job or through a spouse's insurance, you are able to get a pretty good deduction for the amount that you have paid for health insurance for yourself. You don't get to take a deduction at the business level for it, but you will get a deduction on your personal tax return for it. So I definitely recommend if it's their only health insurance, they are only self-employed, definitely look into that, make sure that you're giving that information to your tax preparer, you're keeping track of that and getting the deductions that you're entitled to. Because as we all know, health insurance is not cheap and we should get all the benefits we can for it. The last one I have listed on here is qualified business income deduction, or QBID. This came about a couple years ago with the new tax laws, and it is a straight 20% deduction with some thresholds and some rules that comes off of your profit of your small business. This has been very beneficial for a lot of our clients because it's just a really nice bonus for small business owners to help them out. There are really awesome calculators online to be able to figure this amount based on all those little thresholds I mentioned. Generally, if your taxes are fairly simple, you should be able to figure it out fairly easily. But just make sure. I've had people come in recently that their tax preparer wasn't giving them this qualified business income deduction, and you're entitled to it usually. So make sure that you are taking that easy peasy awesome deduction.
We have a quick question.
Go ahead.
Yeah, quick question. So Grace asks, if I bought software in 2021 for my business, but don't register my business till 2022, would I have my business buy those softwares for me and then deduct for the 2022 tax year?
Yep. You wouldn't have to have them buy them from you, but you would just be able to use those expenses in 2022. As a part of those as up to that $5,000 for the startup costs. So that's kind of the bonus of, even though you spent the money in the prior year, in the year that you start the business, you can take those startup costs.
Great, thank you.
Mm-hmm. One item that it's not really a deduction, I didn't really know where else to put it, so I'm just going to mention it, is estimated tax payments. The IRS likes to receive their money as income is being generated. So generally, when you have a W-2 job, normal, working at a company, they are getting that money through withholding throughout the year from your paycheck. When you are a small business owner, generally you're not, sometimes you're on payroll, but generally you're not paying taxes on the income throughout the year unless you're making estimated tax payments. So that is what the IRS likes and requires. They want you to have paid in through estimated tax payments or withholding either 100% of the taxes that you paid in the prior year or 90% of what is due for the current year. Otherwise, you'll get some penalties for underpayment of your taxes. So if your business suddenly becomes profitable, not suddenly, but things are going in the right direction, you may need to start paying or modify your estimated tax payments. This is where a tax preparer or accountant or whoever can come in handy. If you're making more money, we can help figure out how much you should pay in so you're not going to be paying those penalties, as well as if you end up things aren't looking as good and you have already figured out estimates for the year, we can help figure out if that can be lower, and just help figure out what estimated payments are. It also, in addition to making the IRS happy, it usually makes you a lot happier when you don't have to pay a giant bill in April when you're filing your taxes, if you've paid estimates along the way. Are there any questions on that slide or estimated payments before I move on?
Yeah, so we have another question. Clara just asked, I just started a business in October 2021. Can you explain when we need to start paying estimates taxes?
The quality tax answer is it depends. You generally would probably start paying with your first estimated tax payment being April 15th, which is April 18th this year, is when the first quarter would be due. So your business, you would look at what you were making, what you expect to make for 2022, and then pay taxes on that first quarter by April 15th. That being said, if your tax liability the year before was very low, then your estimated payments won't necessarily be required, but it could still be helpful for yourself so you don't have a big bill at the end. Does that make sense?
And I'll let Clara respond if you want Kimberly to kind of expand on anything. And we have another question from Jessica. I just started an LLC in 2020 as a home-based business, but scaled up to a storefront in 2021. She doesn't think she ever claimed the $5,000 that first year. Would they start with that this year?
I believe that, I believe you have to take it the first year. I might ask Heather to see if she can research that and put it in the chat if we find an answer. I think you have to take it the first year, which would have been, for you, it sounds like 2020.
Heather,
Because it sounds like you're saying that there were expenses that were incurred but have never been expensed.
Yeah, Heather responded that she's on the case.
Okay. If we do find that it has to be the first year and it is a significant amount of expenses, it could be worth it to look at amending that tax return to see if you could get any taxes that you paid refunded, or get a higher refund if you were already in a refund situation. So hopefully we can find an answer on that. Otherwise, if we find that it does have to be the first year, I believe you can go back and amend that to be able to take advantage of it.
Great. We have another question. Do grants count as income?
It depends.
Is it more like what you're doing with the money, or how you received the grant? Who gave you the grant?
It depends where the grant came from, what kind of grant it is. Some are taxable. Generally, I've seen them that they've been taxable prior to COVID world. With COVID world, some are taxable, some are not. Some from smaller like jurisdictions. Say you got a grant from like City of Danvers or something. Some of those are taxable. PPP and things like that, which not necessarily a grant, but that was not taxable. So it really depends on the specific grant. And usually in the paperwork for the grant, it will give that information. But it kind of sometimes has to require some digging to find out if it's taxable or not.
So it's one of those situations where who gave you the money, and contact them.
Kind of, or yes, it's that, which they may or may not know, but it's also talk to your tax preparer so that they can kind of investigate and see whether you need to be claiming it as taxable income or non-taxable income.
Great. So another question, is there a threshold of how much you need to make to do estimates, especially for micro entrepreneurs?
There's not. If you owe over $1,000, I believe it is. If your tax liability is over $1,000, you're supposed, and you, are gonna owe, you're supposed to do estimates. But again, it depends on your tax liability from the year before.
Great. I think since we're still kind of researching that one question with the 2020 LLC going into 2021, it looks like we're good on questions for now, if you want to continue.
Sounds great. So a few of the things that happened in 2020 and 2021, we know that it has been a crazy time. This first tile is going to be really the only COVID type thing that I'm going to talk about necessarily. I guess before I even go into this, can I get people raising their hands if they have payroll in their small business? I don't know if I can see if people are raising their hand or not.
We have one.
Okay, that's enough for me.
Yeah.
So, I just wasn't going to do it if we didn't have any. So per COVID, there was a credit called the Employee Retention Credit, ERC. And this is for self-employed individuals as well. I believe that just came out. But for payroll, in 2020, you were able to get a credit if your business was shut down or restricted due to government mandates, or say your occupancy was lowered because of the state of Illinois saying you can only have 25%, whatever. If any of those types of situations applied to you, you are eligible for an employee retention credit, which is up to $5,000 per employee in 2020. So that is, if it's up to 50%, up to $10,000 per employee for the year of 2020. if that happened to you and you had payroll and you did not take this credit, you are able to go back and amend your payroll tax returns and get that money refunded. I think it takes a little while to get your money back, but it's a good chunk of change. So if that applies to you, I would definitely look into that and get your money back. That was pretty cool for 2020, and they made it even more cool in 2021, where they changed it to get up to $7,000 per employee per quarter for the first 3 quarters of 2021. So that's up to $21,000 per employee. So that's 70% of $10,000 of wages per quarter per employee for the first 3 quarters. And again, if this applied to you, but you did not take this credit, you can go back and amend and get that money for you, and get that money refunded to you. We've had a number of clients that have been able to amend or been able to take advantage of this credit. It's very good for businesses that have been shut down or restricted or having those types of situations during 2020 and 2021. It's been very helpful for them. So I would highly recommend looking into that if you have payroll and have not taken advantage of that yet. The next tile that I have listed here is business meals. They have made it very beneficial for taxpayers again, which is great for us. Business meals that have been purchased at a restaurant, so you can't just go to 7-Eleven or whatever, but if it's purchased at a restaurant, it is 100% deductible for 21 and 22. This is different than previous. We had 50% deductible for business meals, but 100% deductible is a lot better. So go ahead and take advantage of that. Entertainment, I will note, is still not deductible whatsoever. So if you take a customer golfing and out to eat, you can deduct 0 of the golf stuff, but you can deduct 100% of the dinner. So, or a hockey game and whatever you're doing with the client. Entertainment, not deductible. Meals, 100% for last year and this year. The last tile on here is maybe a little convoluted because I don't know how your entities are set up. This may or may not be applicable to you, but Illinois began a new elective pass-through entity tax. You may have heard that on your personal tax return, under itemized deductions, your SALT, which is state and local taxes, you are normally able to deduct them if you're on or itemize and include all of them. However, new tax rules capped the SALT and your property taxes at $10,000. So this affects a whole lot of people that are paying way more taxes than that and not able to take advantage of it. Particularly people who are small business owners and are paying that 4.95% to the state of Illinois and getting no benefit for it, really. What happens now with this new rule is that the business can pay that 4.95% on behalf of the taxpayer, and the business can take that tax deduction. So it lowers the income, lowers the taxes. It's a very good deal for small business owners because they should be able to take care of take advantage of some deductions that they were previously not able to take advantage of. The business is required to make estimated payments going forward, but there'll be no penalties for 21 or 22, I believe, because it's brand new. So if that applies to you, I would look into it. I would get familiar with it. I would take advantage of it. If you're a cash basis taxpayer and were not able to take advantage of that in 21, but it would have been applicable to you, you can still take advantage of it in 22, and you will be able to take that deduction in 22, even though it's applicable to 21. Hopefully that makes sense.
Okay, so just a quick update. You did explain what SALT was, just making sure that was kind of cleared up, state and local taxes. And then, Kimberly, are you able to read the chat? I don't know if you want to cover what Heather found, or I can read it out if that's easier.
I have to figure out how to open it.
Yeah.
Because I don't know how to do it when I'm in.
Well, I'm happy to relay it. So Heather said, what I'm finding is that you should amend your return within 6 months of the original filing date without extensions to take the first year $5,000 deduction. Otherwise, you must amortize the cost over the 15 years. And again, this was relevant to the 2020 starting business, but doing the brick and mortar 2021. Yeah.
Got it. Yeah, so it sounds, since it was assuming that it was the same business, there wasn't a new LLC, there wasn't new EIN, new organization. It sounds like those startup costs that had not been taken, since we're past that 6 months, would need to be amortized going forward, which isn't a super great answer, but you still get to take advantage of that deduction.
Yeah, they commented they did add a DBA.
I don't think that would that wouldn't make a difference for the beginning tax year, unfortunately.
Great. She says thanks.
Yep. So we have, I don't know, a few minutes left. We've kind of been doing questions throughout. But if you have any other ones, go ahead and raise your hand, or ask them, or put them in the chat. Or if you don't want to have it here and you want to contact me, I have my email on the screen up there. It's KimberlyT@StephensStull.com. Notice that there's 2 S's for StephensStull.com, and then I have our office phone number up there. I can't remember if we're answering the phone today. We're kind of close because we closed our office because of the snow. But normally our phone is staffed from 8 to 5 Monday through Friday, so you can call us if you have any questions. Again, we do taxes for small businesses and individuals. We do sales tax and bookkeeping and accounting and accounts receivable, accounts payable, all those things, any of that. We're a full service little firm, and we have my business partner and I, and we have 5 staff. And we we enjoy serving our clients. So I didn't know if there were any questions, but otherwise I was going to make other people talk and hear what your guys' small businesses are, because I'm interested.
Well, thank you so much, Kimberly. And just someone had asked where y'all were located, and I believe that was in Savoy, Illinois, near the Savoy 16 Theater, correct?
Yep. We are, right behind there in a great little brick building by the Montessori school.
Yep, 1401 Regency Drive is Heather commented here. So one thing I'm curious to see if participants or if Kimberly or Heather want to comment. I know when you were talking about deductions earlier, I was reminded of a Facebook group that was for like photographers, artists, and I love how a lot of them kind of said deductions as hacks. So for example, for a photographer, one of their like tax deduction hacks is realizing that like, oh, hey, all those parking meters that you had to use in order to shoot on venue, that's all tax deductible. And I mean, it's a very much of a, oh, of course, when you think about it, but it's not an immediate thing that would come to mind when I think of deductions that you can make for your business. So are there any kind of other random ones that you've seen or have experienced?
Anything that you have to spend to do your business. So for a lot of people, that's your cell phone. You can take the business portion of your cell phone. You can, I get a lot of questions about clothes and uniforms. Which a lot of people think that if I have to buy this specific clothes for work that I get to deduct it. But that's not true. The IRS says that if you can wear it outside of your day job, outside of your job, and it can be normal clothes for someone else, then you don't get to deduct it. So the vast majority of what people think they can deduct, or haircuts for real estate agents and nails and makeup and stuff like that, if you're going to use it not for business purposes, or you could use it for not business purposes, the IRS is not going to let you deduct it. The one caveat to that is if you monogram it or put like your business logo on it and things like that, that's advertising. So that you get to deduct. Or another one that I like a lot is when, say, a baseball team needs a sponsor and your company pays for it. You might think that's a charitable deduction, but really that is probably advertising because they're going to put your name up, they're going to do that. So thinking of opportunities like that is something that can be helpful. Or like if you, I don't know, sponsor a dog and they put your name on the calendar or something, that's advertising.
That's wonderful. Okay, so we have a clarification question. Is 5K just for startup costs, or does that also count towards the portion for home office?
That is, the 5K is just the startup costs. The home office is, you can take that every year, applicable to however much the deduction is.
Thank you. And when you had mentioned cell phone, how would you figure out what the business portion of that would be?
It's a good question. We generally just try to use a percentage. Honestly, I have not seen or heard of a situation where the IRS is looking at phone records saying, tell us which is business calls or texts and which is not. So I generally have a client estimate of, I use my phone 75% for business and 25% for personal. So
Thank you.
So
is there a limit on expenses or supplies you can deduct? Also, if this is more than what you've made, would your tax liability then be zero?
Generally, yes. So if you report a loss for your business, like if your expenses are higher than your income, then you're not going to pay taxes on it. Because you only pay taxes on the profit, not the income or the revenue, I guess. There isn't a limit for deductions or what you can take. I will say that when you are filling out your tax return, they are going to ask for a business code of what your type of business is. It's called a NAICS, it's NAICS code, and they run analytics to try and compare those. And if they see someone that has vastly different expenses than somebody else with that business code, it might raise a flag. But aside from that, as long as you are taking your actual expenses that are ordinary and necessary for your business to run, then there's no limit.
Great, thank you. How much can we deduct for advertising?
However much you spend. There isn't a dollar limit or a threshold of anything like that. It would just be whatever amount has been spent on those expenses.
Great, thank you so much. And Heather did mention she recommends researching or seeking assistance for compliance with reporting. Some reporting requirements get overlooked or people are not aware of them. For instance, sales taxes, annual reports, or sending out 1099s at the end of the year.
Yep, so thank you I forgot to add that to my slide, even though you emailed it to me. 1099s specifically. You're going to be hearing a lot about them for 2021 and 2022. You are supposed to issue a 1099 to a vendor that you're paying money to if you pay them over $600 and they require a 1099. Individuals, partnerships, entities like that, you need to issue them a 1099 to so that the IRS knows that you paid them, they know that they paid you, and then they report that income. Those are supposed to be issued by the end of January, which we are now past. But if that applies to you, and even though it's past the deadline, I would still go ahead and do that. They're fairly easy. You can contact our office. They're easy to do. I haven't seen people be fined for that, but you do want to issue them, as that is the ticket or the receipt really for you to be able to take that deduction for paying that person. And then they know to claim that income on their tax return.
Great, thank you. So I'll let those who are still joining with us, feel free to keep on putting in additional questions. But while you are all thinking of other things, I'm going to quickly go over a closing so I'm not interrupting anyone. But look, we have one more question. How much was the amount on 1099?
$600. Oh, the other thing I was going to say about it, the reason we're going to hear a bunch, places like Venmo or Cash, I don't know if Cash App is one, but Venmo specifically, or the places where you're sharing money, or PayPal, or you're sending money back and forth. A lot of times it's between friends and family or whatever, but a lot of people are using them for businesses and sales and things like that. There's a new rule that anyone that receives or pays over the 600 is going to be getting a 1099 now. So this is possibly going to cause a lot of individuals who are not used to receiving a 1099 to receive a 1099. And it may have been just trading money back and forth with your mom or whatever. So that's not actual income. You are still going to want to report that 1099 on your tax return. Report it as income, and then also report an expense against it that says personal, not business, or something like that. But the IRS has databases that match 1099s that get sent out and tax returns. So if a 1099 gets issued to you and you don't have that income on your tax return, there's a very good chance they'll find it and send you a underreporter letter, which is really fun.
just to add on to that, Heather mentioned these are all third-party service providers, so people collecting money for you. So Kimberly had mentioned PayPal, Venmo, Facebook Money, anything else where you're using a tool to pass money from one person to another.
Mm-hmm. And I will say, I in my research learned that Zelle is not going to do it because they are bank to bank instead of person to person, is their reasoning. So they're not doing 1099s.
I'll share that link to Zelle if anyone wants to maybe switch from
From one of
whatever they're using into there. Great. So quickly, while I can get this in now, because we have kind of a natural pause. Again, this is Champaign Public Library. We are so happy to have had Kimberly Theisen with us today on this snowy day where the library is in fact closed, but librarians never stop working. All right, so yeah. If you have any questions, if you want to meet one-on-one with myself, if you're interested in identifying what your NAICS code is, feel free to book a librarian appointment with myself or with any of my amazing colleagues at our website, champaign.org/bookalibrarian, or just send an email to librarian@champaign.org. I'd like to invite everyone to our next webinar, which is this coming Monday at 7 p.m. We're really excited to have Trish Hall join us. She's a former New York Times op-ed editor, author of Writing to Persuade. And if you think about it, as an entrepreneur, business owners, we're constantly trying to persuade. We want people to buy our products, maybe fund our business, convince someone that, hey, you should definitely be on my team. So this is going to be a wonderful presentation where we learn about how to kind of one up our persuasion skills. So let me go back. Kimberly did share her email in the chat for everyone, which is fantastic. Thank you, Kimberly.
Yep, my pleasure. Oh, I was just gonna if anybody wants to send me questions or whatever, or because we didn't get to do our intros and I really like meeting people, just send me a note and tell me what you do with your business, because I'm super interested. And I like supporting local. So send me a note, tell me who you are.
Fantastic. And are you also on LinkedIn? Is that a great way for others to connect with you?
I'm on there. I'm not very active.
No worries. Email is being here. Yeah. Well, great. It looks like we don't have any other questions. I want to thank everyone for joining us today, and a huge thanks to Kimberly. Thank you for joining us. It looks like one of our attendees shared their business website, so that'll be fun. Kimberly, I can share that with you in a future email too.
Sounds good. Great.
Well, everyone, have a wonderful day. Stay warm or enjoy the snow, or might as well do both. Great.
Yeah, enjoy. Thank you guys so much.
Yes. Bye.
Bye.